Hello everybody. In this video, I'm going to give an update on my portfolio and show you all of my positions. Let's get started. So it's been a crazy week. In the past week, I am up $58,545.31. So up about $59,000 in the past week, which is crazy. And even just today, I was up $26,275.72 just in one day. So a big change in my portfolio. Now I'm at $233,554.65. So about $234,000. And yeah, it's been really crazy lately. I've gained a lot of money and I'm still down for the year. For the year 2026, year to date, I'm still red, but at least I've recovered quite a bit in the past week. In the past year, I am up $52,515.91. That's a 28.99% gain in the past year. Some people have been commenting that I've been not outperforming the S&P 500, but I really have if you look at the past year. So again, the past year, I'm up 29.07%, so about 29% in the past year. If you compare this to SPY, in the past year for SPY is only up 27.41%. So the fact that I'm up 29%, that means I'm outperforming SPY in the past year. Now, year to date, this is where I'm red. Year to date for the year 2026, if it would load. Year to date for the year 2026, I'm actually red. I'm down $39,181.95. So I'm down 14.36% year to date. However, today is May 29th. It's not even halfway through the year yet. So there's plenty of time left to go in the year. We're only in the middle of the year right now. So even though I'm down 14.36% year to date, that can quickly change. I mean, I'm down 39,000 in the past week alone. If I'm able to increase my portfolio value by up over $58,000 in a single week, the fact that I'm down 39,000 year to date, that can quickly change. I may be down this much right now, but again, if I'm able to profit $58,726 in the past week alone, that means that things can change very quickly when we still have more than half of the year left to go. Again, it's only May right now. It's May 29th. We still have plenty of the year left to go. And if you take into account that I can gain $58,000 in a single week, it doesn't really bother me that I'm down $39,000 year to date currently, because things can quickly change in just a week. So there's much time left to go. There's a lot of time left to go in 2026. So who knows what can happen from now until the end of the year. And again, I already said this, but I am up $26,275.72 during the day. After hours, I'm down a little bit. I'm down $699.59 after hours. Let's go over my positions, because I did change a lot of my positions. And some of them are now gone from my portfolio, which I'll talk about later. Let's talk about Amazon first. I'm selling Amazon $250 covered calls. These expire June 26. My return, $560. Now, before I had other covered calls for Amazon, I had the, let's see here, the $240 Amazon covered calls expiring today, but I rolled it out to the $250 covered calls expiring on June 26. So that's what I did. I got rid of the Amazon $240 covered calls that I was selling that expired today, and then I rolled it out to the Amazon $250 covered calls expiring on June 26. It's still in the money. I still chose a strike price that's below the current price. The current price of Amazon is $270.64. My average cost, $259.30. My return, $5,670. But again, current price is 270. I chose a strike price of 250 when I rolled it out. So still it's in the money. And the strike price is below what the current price is at. And that's intentional. I'm locking in that strike price so that if Amazon were to continue going down, I mean, it was red today, right? It was down 1.23% down today. So in the case that Amazon keeps going down and is in the red, I'm actually better off choosing a lower strike price than a higher strike price. Because I've gotten some comments recently too. I think some people are confused about why I choose a lower strike price. And that is because in the situation where Amazon actually goes down and keeps on going down in price, I'm actually better off choosing a lower strike price. Next, we got Google. I'm selling the Google $350 covered calls. These expire June 26. My return, $972. This also is something I rolled out. I had Google covered calls expiring today and I rolled them out. Where is it? Yeah, so before I was selling the Google $350 covered calls expiring on May 29th, which is today. However, I rolled it out to the Google $350 covered call expiring June 26th. So in this case, I kept the same strike price of $350, which is below the current price. So this one is also an in-the-money covered call. The current price of Google is $380.56. My average cost, $380. My return, $223.02. So again, a strike price of $350 is below the current price of $380. And it works the same way, right? If Google were to keep on going down, it was down 2.50% today. So if this continues and Google keeps on going down and down, then I'm actually better off choosing a lower strike price than a higher strike price. Next up, we got Robinhood. I'm selling the Robinhood $110 covered calls. These expire June 26. My return, $280. Now, I was already selling covered calls on Robinhood. However, I was selling the $100 covered calls on Robinhood expiring today. So yeah, I was selling the Robinhood $100 covered calls expiring today, $529. However, I rolled it out to the Robinhood $110 covered calls expiring June 26. So in this case, I actually chose a higher strike price than before. So I went from the $100 strike price to the $110 strike price. So Robinhood right now is at $94.02. My average cost, $114.30. My return, I am down $40,601.44. So the strike price I chose is above the current above the current share price of $94. So the current price is $94. I chose a strike price of $110 so that if Robinhood were to go up to $110, I would realize all of those gains, from $94 up until it goes all the way up until $110. That's if it goes up that much. If for some reason Robinhood tanks and it goes back down to $80 or even $70, then I actually would have been better off choosing a lower strike price. However, in this case, I am hoping that Robinhood goes up and up to $110 or even maybe more than that. We'll see. So we'll see what happens from now until June 26. Now let's talk about SoFi. SoFi, I was selling... Well, let's talk about my new position first. So SoFi, I'm selling the $18 puts. These are cash secured puts expiring on June 26. My return, I am down $216. Now before, I did have some positions on SoFi. I was selling the $22 covered calls. So yeah, I was selling the $22 covered calls. I tried to roll them out to $24 covered calls. However, the order never filled. So what ended up happening was that my SoFi $22 covered calls expiring today actually did expire worthless. So I just collected the full premium for that, for selling those $22 covered calls, because SoFi ended up not going above $22 per share. It is at $18.28 per share. So because SoFi stayed below $22 per share at expiration, I just kept my shares of SoFi. And then I gained the premium that I got from selling those $22 covered calls. My average cost of SoFi, $5.77. My return, $66,481.22. I am, however, selling the cash secured puts, and before I was already selling cash secured puts. I was selling the $17 cash secured puts expiring today. So for my new position, I'm actually selling at a higher strike price. Instead of selling SoFi $17 puts, I'm now selling SoFi $18 puts. So I increased the strike price for my cash secured puts that I'm selling. This gives me more premium, assuming that SoFi stays above $18 per share at expiration. I'll just collect the premium. And I collect more premium than I would if I had chosen a $17 strike price. The downside is that if SoFi were to go down quite a bit, to like, let's say it goes down to like $15, I actually would have been better off choosing a lower strike price. But I'm hoping that SoFi stays up and it keeps on going up. As for the covered calls, those expired and I do not have a new position of SoFi covered calls. For now, I just have the cash secured puts. However, next week when the market opens, I'll be sure to create a new covered call position against my SoFi shares. I might even buy more shares of SoFi. We'll see. But for now, I'm good with what I have. As for my buying power is $54,090.64. This is a margin account. My margin buffer is 5.30%. My margin buffer indicates how close I am to a margin call. The higher my buffer percentage, the lower my risk of getting a margin call. 5.30% is quite low for a margin buffer. I mean, usually I like my margin buffer to be like 20% or more, at least 15% or more, somewhere around like 20%. However, 5% is a little bit low. However, this is only because some of the positions that expired have not finished settling yet. Once they have, this should go up. My buffer should go up once it realizes, hey, my shares of, some of the positions I had have freed up, and that should free up some buying power. Once it calculates that, my margin buffer should go up higher than 5.31%. As for how much margin I'm using, my margin used is $305,788.94. My interest rate, my annual interest rate is 4.50%, and the daily interest that I am paying is $30.34, and I am using $1,000 of margin interest free. So yeah, I'm at $235,774.78. So around, $235, $236K. And just a reminder, if you look at the 1 year chart, I'm outperforming SPY in the past year. So 29.93% in the past year, as opposed to SPY, which is only up, I think 27 point something. Sorry, my internet is like weird right now. Yeah, in the past year, SPY is only up 27.39%, as opposed to more than 29% of my portfolio. All right, I'm gonna keep on making more portfolio updates to show you guys how my portfolio performs for the rest of the year. But for now, even though I'm down year to date, there's plenty of time left to go in 2026. Who knows what could happen? Things can change very quickly. If I have another week where I gain, over $58,000, then this could easily turn green in a very short amount of time, right? So there's plenty of time left to go in 2026. Let's see what happens from now until then. for now, that's pretty much it for my portfolio update. I hope you guys enjoyed watching me go over my portfolio and my positions and how I, expect things to go in the future. Hopefully things go well and I gain even more than I am now. All right, thanks for watching. If you guys like this type of content, please make sure to like and subscribe, and I'll keep on making more of these videos in the future. Thanks for watching, and I'll see you guys next time. Bye.